Secretary of the branch, CA Prashant Kumar. Learned speaker of today's session, CA Upadrashta Ramakrishna Garu. Senior members of the profession, respected past chairman, members of the managing committee, my dear professional colleagues, a very good evening to you all and welcome you all to this third day of direct taxes SHASHTOTSAV, a week-long webinars on direct taxes. And today's webinar on the topic, in-depth study of sections 9B and 45(4) of Income Tax Act 1961 as amended by Finance Act 2021. We, the members of Visakhapatnam branch, convey our heartfelt thanks to the speaker, CA Upadrashta Ramakrishna Garu, for immediately accepting our request and address the members of Visakhapatnam branch. Members, I'm surprised to know that today's speaker, CA Upadrashta Ramakrishna Garu, uses a normal mobile, not a smartphone. He's not connected to WhatsApp and other social networking apps. Rarely we could find such people with simple lifestyle in present days.
Thank you so much.
Finance Act 2021 introduced a new section, Section 9B under Income Tax Act, which specifies the provision related to transfer of capital assets or stock in trade on reconstitution or dissolution of firm or association of persons, etc. Here, the questions arises in the minds of SSCs as well as our professional brethren. What is capital asset? What is deemed transfer? What is dissolution? What is the method of tax calculation? What is the time of transfer? So on and so forth. Section 45(4). There should be a specified person, should be a specified entity. Transfer of capital assets or money or both from specified entity to specified person during the previous year in connection with the reconstitution of specified entity, whether it is applicable in case of dissolution or whether it is applicable for transfer of stock in trade. So many issues involved in these two sections with regard to capital gains. To explain about the implications of 9B and 45(4) sections under capital gains, we have eminent speaker with us today, CA Ramakrishna Garu with us. Let us gain thorough knowledge with his deliberations on the topic. Now we request CA Veena Agarwal to introduce the speaker of today's webinar.
Good evening all. Good evening, sir. CA U.Ramakrishna is born on 30th of August 1959 in Nainpur, a town in Madhya Pradesh. He has done his education in Nagpur and has graduated from Nagpur University. He qualified his CA in May 1988 and is in practice since then. Apart from having long-standing experience of 32 years in direct taxes, he also has expertise knowledge in the field audits of PSUs, banks, and NGOs. He had spoken in many seminars on varied topics in the field of direct taxes. And as said, learning being an ongoing process, he is always up for any new topics with an inclination to learn something. With these few words, I would like to introduce CA U.Ramakrishna to this webinar.
Thank you, Veena Agarwal. Now I request Speaker Ramakrishna Garu to take up the session.
Before we start, let's have a small prayer. Gananam tva ganapatikum havamahe kavim kavinam upamashkavastamam jyeshtarajam brahmanam brahmanaspatana shrunannoti visida sadhanam prano devi saraswati vajebhir vajinavati dhinam vitrevatu. First of all, thank you Murali Krishna Garu, Chairman, Secretary Prashant, Sharma Garu, and all other members, my brothers in fraternity, online, offline as well. We are all very, at least I am accustomed to rather speaking in the presence of physical presence, I would rather say. And to some extent, gaining acquaintance with this technology. As Murali Krishna Garu has rightly pointed out, I am still using ordinary basic phone for the simple reason not to be being disturbed. Anyhow, the purpose of communication will be served, but may not be that fast as you all do. The IQs of younger generation is much more than what we do have. Now, before proceeding further, this 9B and 45 are absolutely new. Now, let's imagine a situation wherein we are there is a dive from a flight, dive from a plane. You are going to fall on the floor. Your parachute does not open. Imagine the thoughts you get. What are the ideas you get? What should you do? Same is the situation over here. How you are going to land it, rather how I am going to help you in landing on the floor with the help of parachute, without the help of parachute, that part we will take care of afterwards. For the time being, you'll just keep on imagining that you are still coming down. Both these 9B and 45-4, as of now, we don't have any precedents directly related to these two sections. There are interpretations, both in the public domain as well as through other writers. I have tried to compile some of those and also try to put in my views into those ideas. Babu Sarva avada undali.
రాజ్ కుమార్ కొద్దిగా రామకృష్ణ గారికి హెల్ప్ చేయమా రాజ్ కుమార్.
జానన్న ఇక్కడ స్క్రీన్ మూవ్ అవటం లేదు. ఈ వర్డ్ మీదకు మూవ్ అవ్వాలి. పేజ్ అప్ 1 second వస్తున్నారు. Yeah. Now see what happens over here is, before going in for straight away into the subject, I would like to make certain some of the things which, or rather I would say, I would put a rider. I would put a rider to what I am going to say. In these provisions which we are going to see, the provisions both 9B as well as 45B, they refer to the specified entity or other association of persons or body of individuals not being a cooperative society. Such long word will not be used. For the sake of convenience, we will be using for our discussions the word firm, which by implication you may take it to be a member of society, vagera, 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 vagera. Likewise, the specified person refers to the person who is a partner in a firm or a member of other association of persons or body of individuals, not being a company or a cooperative society. Likewise, instead of referring to the whole matter over and over again, I shall be using the word firm or partner for sake of convenience, instead of wasting time on you constructing the entire sentence over and again. Now, we shall be skipping topic related to goodwill for the simple reason that this word goodwill itself has a lot of repercussions. And now we see that there are a number of amendments. You know how many amendments are there between the bill and the act, and after the act and subsequently? The bill that was there in February and passed in March, between the bill and the act itself, there are roughly 127 amendments. They were not carried out to the act in the way they were supposed to. Some are altered, some are deleted, some are edited. Likewise, even after the act was passed, we are now getting number of amendments. By the time I was compiling these, There were 18 amendments, not 19. 18 amendments. 19th amendment was in July 2021, that is related to goodwill. This by itself is a very big topic. And I'm very sure we do and we definitely require another seminar or another meeting for going through this term goodwill, which is an intangible asset. Now, we will take a brief history as to what are the reasons for these amendments. See, whenever there was a question of dissolution or reconstitution, in the earlier provision 45(4), in the case of distribution of a capital asset, there were cases, they say that is applicable to cases otherwise than on dissolution of the firm, has always been a subject matter of controversy, whether dissolution or otherwise, whether there is a transfer, whether what is the relationship between the partners, whether they are firm and partners are one and the same. Likewise, there was an argument which says that 45(4) comes into play only in the case of dissolution of a firm and not in the case of reconstitution. This was so because the existing provision, when I say the existing provision, it was already there, not the amended one, before the amended one. It was using the word chargeability on distribution of a capital asset on dissolution. Catch hold of the preposition on. What happens to the word on dissolution or otherwise? There were further disputes regarding the word otherwise, whether it includes retirement, reconstitution, change in profit sharing ratio, all those. With this, judiciary has often taken a view that the distribution, division, or allotment of assets by a partnership firm upon dissolution or reconstitution is nothing but an adjustment of mutual rights between the partners or amongst the partners. And it is all these, because of all these judiciary pronouncements and disputes, they have led to the amendments that we are now going to discuss about. So to overcome this, the Finance Bill initially had proposed 2 amendments, both in section 45. There was no intention of bringing in 9B into picture. 45(4), which deals with the gain arising on right by a partner, that is transfer of a right by a partner, etc., at the time of dissolution or reconstitution of the firm in consideration of a capital receipt of capital asset. That means whenever there is a reconstitution, whenever there is a dissolution, the partner gets asset from the firm. That was the initial proposal. Then there was a proposal to introduce 4A in 45 with a view to tax gain arising from the transfer of property by the firm. See, the first one was right by the partner. A partner has a share in the partnership firm. That is a right of the partner. For relinquishing this right, he received something from the firm. That was the intention of 45(4). And 45(4)A was supposed to deal with the transfer of the property by the firm. See, now what happens over here? We were landing back again to the same place where we came from. Because the transfer by the firm to the partner is nothing but adjustment of mutual rights. So it is for this reason again, we have removed this 45(4)A from the section 45, chargeability under section 45. And that has been taken to 9B with a similar or altered words. The Finance Act 21 has reworded the provisions. The words, the meaning that was there initially in 45.4 has changed, and instead they have inserted a new provision subsection. Instead of inserting a new provision 44A, they have introduced a similar, albeit a deeming provision by a new section 9B in the Income Tax Act. Now, by bringing the above provision, that is deeming provision, not under section 45.4A, but in the deeming section itself, deeming 9, because we know that section 9 deals with the incomes that are deemed to accrue or arise of income deemed to be. So 9B is included under that provision. The decisions of the courts wherein it has been held that distribution, division, or allotment of assets of partnership is nothing but a mutual adjustment of the rights between the partners, and there is no question of any extinguishment of rights in the partnership amounting to transfer of assets within the meaning of 247 have been overcome. Now, before proceeding further, there are some of the important definitions which I would like. We all know that these are the definitions. We all know they have been there in the Act right from the very beginning, but just to brush up and to see or to recollect that how they are going to affect us in the new provisions. I'm just taking a broad, very fast view over there. First of all, block of asset. As I told you all in the beginning only, goodwill will be a separate topic by itself to be taken at a later date. So block of asset definition has changed. So tangible assets, that was there right from the beginning. Intangible assets, it was not very clear whether it includes goodwill or not. So now by this Amendment Act, it has been made very clear, not being goodwill of a business or profession. So next is capital asset. The definition of capital asset, that is why I was afraid. See, now it is thundering outside. The property of any kind held by an assessee, whether or not connected with the business. Now, there is one more item that has been included in this capital asset. We know that insurance policies, they are though assets, they are exempted assets. So when we speak of capital asset over here, we mean that only those assets that are chargeable. Agricultural land is not an asset. Then comes insurance policies are not assets. There are a number of items that do not fall within the meaning of the term asset, capital asset. I was talking about this insurance policy. So there are certain situations when the insurance policy is liable to tax. That is, they do not fall under 1010D, particularly the unit linked insurance policy. 1010D has been amended. It has now included some proviso. Among them are 4th and the 5th proviso, which say that under certain circumstances, this insurance policy will not be exempted. That means the amount received on the insurance policy is not exempted. So those insurance policies which are not exempted under section 1010D, unit linked insurance policies, will be covered within the meaning of capital asset. There are also certain exclusions. That is, items that do not fall within the meaning of the term capital asset. See, we are using the word capital asset. It may be long-term capital asset, it may be short-term capital asset. So the first exclusion is stock in trade. That is, stock in trade is not a capital asset. Please be careful about that word, stock in trade. Next, fair market value. See, fair market value is used. See the words that follow. In relation to a capital asset. they are not using in relation to any other items. They are using the word fair market value in relation to a capital asset. See, the firm, partner, partnership, all will be having the meanings assigned to them in the relevant acts. Likewise, when you go to 242A, which defines the short-term capital asset, over there are a number of items that are given in the explanation, which says that to determine the period of holding, that means to determine the period, whether it is long-term or short-term, we have to take into account certain period, we have to exclude certain period. This explanation again is also saying, in determining the period for which any capital asset, again, why I am stressing the capital asset, because 9B uses the word stock in trade also. That is why. So all this fair market value, capital asset, then transfer, if you go to 247, that also says that transfer in relation to a capital asset. It is again not saying in relation to stock, fair market value in relation to stock. It is not saying. See, 247, transfer in relation to capital asset. So these are the some of the, and again, there is one small issue over there. I would like to take that. Except in the case of clause 4 of 247, which says that in a case where the asset is converted into stock in trade, a asset is converted into stock in trade of a business carried on by him. In this case, that will be regarded as transfer. Keep this point in mind. That is, asset converted into stock in trade to be regarded as transfer. Now with this, we will now go on to the main topics. Right. See, there are two aspects. The whole of this or these amendments can be categorized into two. First one is dissolution, which is exclusively the subject matter of 9B. 45(4) talks of reconstitution only. It does not speak anywhere of dissolution. 9B talks of dissolution as well as reconstitution, both. So, in any event where there is a reconstitution, that is, in order to arrive at the amount chargeable under section 45, we should know the balance of the amount in the partner's capital account, so that we can arrive at the balance chargeable under, we can arrive at the chargeable amount under 45. For that, we should first calculate the amount under 9B. That is why, whenever there is a reconstitution and, or rather, reconstitution, we should take both 45 as well as 9B. First calculate 9B. Therefore, I am dealing first with 9B. This is inserted by the Finance Act 21, effective retrospectively. That means it was inserted afterwards. Here is one amendment. Income on receipt of capital asset or stock in trade by specified person from a specified entity. So the head itself says that. Now look at the components, what we require. Where a specified person receives during the previous year any capital asset or stock in trade or both. Now careful over here, that is why I told in the beginning, stock in trade is used by this section 9B or both in connection with the dissolution or reconstitution of such specified entity. Then the specified entity shall be deemed to have transferred such capital asset or stock in trade or both, as the case may be, to the specified person in the year in which such capital asset or stock in trade or both are received by the specified person. So the catchwords over here are in connection with dissolution or reconstitution, deemed transfer, year in which it is received. These are the three main components or the catchwords which will attract this section. Earlier section 45.4, as I told you, it was using the word on dissolution. That means at the time of dissolution only, if the person receives any asset, then that would be liable for capital gain tax. Here there is a link, de-link between the happening of the event and the year of receipt. The happening of an event can be in any year. The chargeability arises in the year in which such capital asset or stock in trade is received by the specified person. Now the term specified person, reconstitution, specified entity will be taken at the end of this 9b. So first to remember is this is a deemed transfer. This subsection states as to when it is to be assumed that there is a transfer, or rather I would say when it is to be deemed that there is a transfer. Simply speaking, we can say that the year in which the capital asset or stock in trade, for the sake of convenience, we will just say only stock, or both are received by the specified person. Now, please be very careful over here. This subsection does not talk about money. Section 45 talks of money. 45.4 rather, to be specific. Now, they are not using the word cash. They are using the word money. What does this word money? We will look into that afterwards. For the time being, please remember this section is not using the word money. Receipt by the specified person. Now, when can a thing be said to have been received? There is absolutely nothing in the Act. The Act has not given any meaning to the term. So we need to fall back on the meaning in the common language. The other day when we were looking into the interpretation or meanings, how to interpret the Act, how to read the Act, this was one of the things that was stated in over there. If the Act is specifying the meaning of that, we have to fall. If it does not, we have to fall back onto the common language. So in ordinary language, or rather in English, we mean that be given, presented with, or paid. Written acknowledgement of the receipt or a money or thing without containing any affirmative obligation. I have taken the money, it does not mean that I am going to comply all the requirements that you want. There is no affirmation, it is only an acknowledgement of money, that's all. Either party, a mere admission of a fact in writing, and being a mere acknowledgement of payment is subject to parole, that is generally of a document agreed orally but not in written. It can be contradicted also. The rule, next thing. So the rule of receipt may be different for different things. For movable assets, it may have one rule, whereas for removable asset, it may have another rule. This again is subject to various laws, like sale of goods, contracts, transfer of property, then significant risk and reward passing, ownership, all those things. Determination of time of receipt is essence because our subject is based on this word only. Even then, let us suppose we are satisfied with the meaning of the term receipt. There is still a doubt as to what will be the date of transfer. Is it the date of dissolution, change in the constitution, date of actual receipt, or even a constructive receipt? So that is, clarifications are awaited for these things. During the previous year. Which previous year? As I told you in the beginning only, that there is a de-link between the happening of the event and the receipt. If we read the section it will be very clear that it is in connection with the dissolution or reconstitution and not on dissolution, because I told you in the beginning, on dissolution means on the happening of that event then and there itself. Then does it mean that in the previous year in which there is a reconstitution or dissolution? No. Now let us take a case where there is a reconstitution within the meaning of this section in one particular year. None of the partners concerned with the happening of the event, maybe reconstitution or dissolution, have received anything. No capital asset, no stock, nothing they have received. Will 9B be applicable? Let's go further. After some years, one or some of the partners concerned with the event have taken some or other has taken some capital asset or stock in trade. Will 9B be applicable? In the first case, that is, only there was an event and nothing has gone to the partners, 9B will not be applicable because there is no receipt in over there. In the second case, assets are given but not in the previous year in which the constitution, reconstitution, etc. has taken place. Does it mean nothing is taxable? No. So, for this reason, we have replaced the word on and substituted it in connection with dissolution, etc. Now, I will not read the portion again, colored portion. That means in the year of receipt, there will be a liability of tax. Long-term, short-term, business income, etc. We will see it afterwards. We can take a simple and the best example, a very classic example between the happening of the event and the chargeability of the tax. Take the example of section 45.2. What does 45.2 say? That 45.2 clearly say that it is transfer in the year in which the asset, capital asset is converted into stock in trade. But the chargeability is postponed to the year of receipt. That is, chargeability is postponed to the year of sale. Sorry. In the year in which the stock in trade is sold, in that year it is liable for tax. Likewise, here also, chargeability is postponed to the year in which the asset is received by the specified person. Let us take a case when capital asset, wherein the asset is given, but capital is converted, sorry, no asset is given, but capital is converted into partner's loan. What will be the situation? It has not been specified in over here. Loan is legally enforceable right. Therefore, one view can be taken is that right is an asset and hence it is a deemed receipt. Another view can be taken that nothing is received, but only the form of the right to receive has changed. That is, right in assets as a partner to right in as a loan creditor. Here also, when we go to section 45.4, it says that capital represented in any manner. Now, the question that arises is, after a person ceases to be a partner, can his balance be called capital at all? What will be the value then? These are the issues which we are going to face. And there is no answer, unresolved issues. Let's take another case. If the liability of the outgoing partner is taken by the other partners personally, so A, B, C are partners, A is retiring, B and C say that your liability will not be borne by the firm, your liability, we will take it, your capital will take it, we are going to pay you. Now let us be very clear. The section is very, very clear. It should be received from the specified entity only. It cannot be from others or other partners. If it is received from other persons or partners, then there is a possibility of 56(2)(10) being attracted. Conversion of a company, conversion into a company, this clause is not applicable. Further, in the entire 9B, now please be careful about this. In the entire 9B, the words notwithstanding anything contained in 45(1) is not used. These words are used only in 45(4). 45(4) where clearly stated notwithstanding anything contained in section 45(1), the following will be there. Therefore, in the event of dissolution, I will not use the word on, we can still take shelter of section 45(1), which is the charging section for capital gains. You can take all the benefits because 45(1) starts with the word that save as otherwise provided in section so. So you can very well go for 54, 54F, 54B, whatever as the case may, whatever is applicable. There should be an event, that is we have already seen. It can be dissolution or reconstitution. And the event is important. Receipt may be at some other time. Look at this now. Dissolution is, we are saying that there is a dealing between the dissolution and the receipt of the asset by the specified person. Dissolution is business discontinued. One particular year, the business is dissolved. After some number of days, some number of years, the specified persons receive the amount. Then what will happen over there? There is no business at all. See, in such a type of situation, you can't charge non-existing entity. The only solace which we can see is, it is found in chapter 16, special provisions applicable to firms in part C of that, which deals with changes in constitution, succession, and dissolution of the firm under 189 section, that is firm dissolved or business discontinued, which says that all the provisions of the act, including that of levy of penalty, etc., shall apply. So impliedly, even at a later date, we can still catch hold of the firm. That was about 9B clause subsection 1. We'll go to next 9B2. Any profits and gains arising from such a deemed transfer. See, we have in the beginning only said that it is not an actual transfer, it is a deemed transfer of capital asset or stock in trade or both, as the case may be, by the specified entity, shall be deemed to be income of such specified entity in the previous year in which such capital asset or stock in trade or both are received by the specified person and chargeable to income tax. This clause tells us the year in which is chargeable, the head in which is chargeable, and in whose hands it is chargeable. Putting it simply, it is chargeable in the hands of the specified entity. It is chargeable under the head either income from business and profession or capital gains, as the case may be, because stock in trade will go to business and profession, asset will go to capital gains. And the year of receipt, in the year in which it is received by the specified person, it will be chargeable to tax. Catch hold of the words in accordance with the provisions of the Act, because that is what we are going to look into. If you see section 28, 28 has not been amended so far. 9B makes a reference that it will be chargeable as profits and gains of business or profession. But section 28 has not been so amended. Section 28, which is the charging section for business, only says that it lists, it gives us a list of items that are chargeable. Following income shall be chargeable under this head. And the clause, the section 9B reference is not there at all. However, we very well know that stock in trade, whenever it is sold, wherever it is sold, it is always a business income. Now let's wait and see what happens, whether the 28 will be amended or not. 9B3. This section deals with the fair market value. We said that stock to the specified person, asset to the specified person will be liable, will be chargeable to tax in the hands of the specified entity in the year of receipt. At what values? This is the section which is going to explain us at what values and at what date. For the purpose of this section, the fair market value of a capital asset or stock in trade or both on the date of receipt by the specified person shall be deemed to be the full value of the consideration received or accruing vagera. See, it is using the word fair market value. That is why I said in the beginning only, please refer to the meaning of the word fair market value. Fair market value on the date on which the capital asset or stock in trade or both or received by the specified person shall be the full value of the consideration. Primarily, if no meaning is assigned to a word in the specific section, 9b has not given any meaning to it. So we have to fall back onto the definitions section, which is 2 in the case of our income tax. If it is not available there also, then we fall into the general meaning. Neither 9b nor 45(4) has given any meaning to the fair market value. So we have to invariably go and depend on the definitions given in fair market value. Look now, fair market value as per section 222b, which we have seen in the beginning only. It means in relation to a capital asset. 247 transfer in relation to a capital asset. Impliedly, the meaning of the fair market value cannot be applied to stocks. That is stock in trade if a partner is receiving. So then how do you value the stock in trade? We'll check it up afterwards. Further, the capital asset, as we have seen in the meaning in the beginning, 214, provides certain exclusion, and stock in trade is the first amongst those exclusions. So, so yes,
Right.
so it can very safely be concluded. Yes, please.
లేదు సార్ చలం గారిది అన్మ్యూట్ అయిపోయింది.
Okay,
can
okay.
proceed, sir,
Continue,
please.
Askara?
Okay. Yeah,
You can continue.
Yeah.
So invariably, we can very safely say that the definitions of the fair market value, the definitions of transfer are not applicable to stocks. Then how do we value the stock? Therefore, we have to now value the stock depending upon the method of accounting which we follow consistently, and also the ICDS or AS that may be applicable. And this is the view, and it also gets support from the provisions of 9b2, which clearly says that in accordance with the provisions of this act. That means stock, if it is given to a partner, we can value that stock in accordance with the provisions of this act. Then we have to depend on section 145 or rule 11 UAB in certain cases. That is why I said 28(6)(a). For all practical purposes, for the purpose of section 9b and for the purpose of section 45, the valuation has to be done in accordance with the valuer as defined in 11U rule. Added to this, we further have a problem of the nature of the stock in trade itself. See, whether it is readily marketable, whether it can be generally used for the general purposes, it is made to specific order, whether it is movable, immovable, shares, bullion, etc. This is again going to be an unresolved issue. Now, look at the sentence. Further look, fair market value of the capital asset or stock in trade. When we go to the set theory, if you look into the set theory, that is U within bracket A or B. Say A within bracket B or C. That means when you open the set, it can be A or B, or it can be A or C. Here, do we draw the meaning that fair market value of the capital asset or stock in trade? Or can we make an interpretation that fair market value of capital asset separate and value of stock in trade separate? So this again needs to be seen. Safe side, I will assume that the fair market value of the capital asset or and stock in trade, both can be, it can be applied to both. Now starts the actual problem. 9B4 has given wide powers to the board to frame the guidelines that are applicable for removing the difficulties faced in interpretation of this section or for guidelines for following these sections. Now, in exercise of the powers under this section, board has given circular number 14 dated 2/7, which we will be dealing right now after some time. That 9B5 is the procedural aspect for the government to follow. This 9B has certain explanations. Explanations 1 and 2. 1 defines reconstitution of the specified entity. Now, what does that mean? Is given over here. One or more of its partners or members, as the case may be, of such a specified entity ceases to be partner or members. Look into the thing like one or more of its partners or members ceases to be. So impliedly, clause A is applicable in the event of reconstitution by way of retirement. That can be, when can a partner cease? Only if he retires. Now the words used are one or more, not all the partners. If all the partners retire at the same time, then what happens? It's nothing but a dissolution. Therefore, the clause refers to partners. See, now look into the word over here. Partner or members. I'm using that word partner or members over here because when I go to the next clause, it is not using the word partner or members, it is using something else. We will see. Now clause B. Remember the word ceases over there in clause 1. In clause B, one or more new partners or members. Now look what is happening over here. As the case may be, are admitted in such specified entity in such circumstances. The circumstances are that one or more of them, I can't see over there, specified persons who were partners or members, as the case may be, of the specified entity before the change, continue as partner or members of the member or members after the change. That means, first question is, how can a person be called as a partner without being admitted? So they are saying new partners or members. That means after admission only he will become a partner. So when we say that, probably it is after admission he is a new partner. Before such admission, he can only be a partner. He can only be a person. The status of the partner is attained only after he joins. The clause, this clause does not deal with the situation where there are numerous reconstitutions and all the partners of the original entity are not in the entity. Now we can imagine, it's not an imagination, this is a situation which we have faced. what does the word before the change mean? First of all, we'll look into before which change. Yes, see, the words over there are coming over here. Once again, I'll take. As the case may we read the last. Before change, continue as a partner. Which change? Before which change? That is not clear over here. Now, I assume that that is after every change. Whenever there is a reconstitution, some of the partners before the change should continue. One or more of the partners, not all, one or more of the partners should continue. Now let us assume, let us take a simple case. Assume A, B, C are partners in a firm. And the reconstitution is as under. First reconstitution, A retires, B admitted. That means B and C are there, B and C are there. They were there before the change, they are there after the change. Therefore, it will fall under this. Now, second reconstitution, B retires, E is admitted, D and E are there after the change. Third reconstitution, C retires, F is admitted, D and E are there after the change. So, after every change, some of the earlier partners are continuing. Now, in the final analysis, if we see, all the partners are new, D, E, F are new. But on every change, one of them was continuing. Therefore, there is still a reconstitution and it will fall under over here. Because the act is not, this is what has been happening right from the very beginning also. What happens, the firm will have certain assets. The partners come, they change, they go on changing and the new partners are admitted. The section is not using the word one or more of the original specified entity shall remain, shall continue. No. So this is going to be a very big issue subsequently. You may even find that these words being introduced in the act subsequently by way of an amendment. Further, let us take another instance. A, B, C are partners. Let's suppose after some time, D and E are admitted and all ABC retire. Will this be a reconstitution? Definitely it will be, because if we read the first clause A, it says that one or more of the partners or members, as the case may be, of such specified entity ceases to be partners or members. Therefore, one or more of the persons, so all these to be partners, therefore it will still be applicable. Next, clause C will come over there. I skipped it. All the partners, this is clause C for reconstitution. All the partners or members, as the case may be, of the such specified entity continue with the change in their respective share or in the shares of some of them. This by itself is explanatory. We need not much deliberate upon this, but even then, respective shares of some of them, the word uses, not all of them. Even it is not necessary that the sharing of all the partners shall be changed. No, even if some of them are changed, though don't get carried away by the word all the partners. The first word is all the partners, don't get carried away. A, B, C, D are equal partners. Let us suppose A and B don't change, C and D change. This is a reconstitution. Now the word specified entity. What is meant by the term specified entity? It is saying over here means a firm or other association of persons or body of individuals not being a company or a cooperative society. So this means this specified entity will exclude a company or a cooperative society. The term used is cooperative society, not society. There is a subtle difference between the two. We'll just take a brief. Now, society is a group of people living together in the same geographical location. Cooperative society is also a group of people who are not only living together, but having agreement for cooperation within themselves. Please be careful. The condition over here in a cooperative society, they come together for sharing their labor, etc., etc. A cooperative society can be of a housing, employees, thrift, dairy, cooperative unions, etc. They pool their labor, money, resources for common benefit. In a society, it is not necessary that it should be. It can come into existence for any of the purposes like charitable, education, and so on and so forth. Further, look into the situation. In the case of society, no member has the share. Rather, I would say his share is not defined. Rather, they don't have any share in the profits at all. So where is the question of reconstitution in such a situation? Why does he use the word society over there? Will this come into this picture at all? Next would be, now, the governing body or the body or that, suppose there are only 7 members in a society, every year they change. Will this be a reconstitution or will this clause be applicable? Likewise, in the event of dissolution, the members cannot share the surplus. It is generally handed to some other institution without any consideration. So in the event of dissolution, now how can any person receive any amount from them? So in such a situation, my opinion is it may not be applicable to such type of the institutions. Now, specified person means who is a partner of a firm or a member of others or a member of other association of persons or body of individuals, not being a company or a corporation, in any previous year. So, what does this word "in any previous year" mean? Is it necessary? Is this not necessary? It is in the previous year in which the event takes place. Will it be applicable to any year in which he was a partner? Section 231 does not come to our rescue. In 231, the meaning of the person, whether it means the one that is given in 231, or whether it means the one that is applicable to the relevant law like Partnership Act, etc. What if the minor is a person? I mean, is a partner, example in the case of a firm. Now, I feel that 231 cannot be applied because the word person is followed by an adjective quality. The quality of the person should be a partner or a member. So also that there is a specific meaning assigned to the specified person, we cannot take shelter over there. As I told you already that in any previous year, does it mean that this is not necessary in the previous year in which reconstitution take place? It can be in any previous year. How do we deal this? That's going to be an issue again. Now that was about your section 9B. We'll go to the next section 45. This will be relatively easy because most of the terms, most of the definitions we have already seen are covered in 9B. We have seen that notwithstanding anything contained in subsection 1, this clause is not there in 9B. So, notwithstanding anything contained in subsection 1, where a specified person receives during the previous year any money or a capital asset or both. See, this is using the word money or capital asset or both, whereas 9B was not using money. It was using stock or capital asset. In connection with reconstitution, impliedly 45(4) is not applicable to dissolution of the specified entity, then any profits or gains arising from such receipt by the specified person shall be chargeable to income tax as income of such specified person under the head capital gains. So we are going to charge it to tax under the head capital gains, and it shall be deemed to be the income of the specified entity of the previous year in which such money or capital asset or both are received by the specified person. And notwithstanding anything to the contrary contained in this act, such profits will be determined with the following formula. That is, A is equal to B plus C minus D. And we go to define what is A, B, and C and D. A is the income chargeable to income tax under this head, under this subsection, as income of the specified entity under the head capital gains. So remember this word A, because this is going to be the one which we will be using in rules 8A and rules 8AB, which is going to be taken up shortly after this section. Because most of the problems are centered on this term, on this A, that is the capital gains, which is charged under section 45(4). B is the value of money received by the specified person from the specified entity on the date of such receipt. We have seen the meaning of the word money. C is the fair market value of the capital asset on the date of receipt, and D is the balance in the capital account represented in any manner. Catch hold of the word represented in any manner at the time of reconstitution. That means if the partner gets asset or money which is greater than his capital, then there will be a capital gain, which will be income of the specified entity. Now, this proviso 1 goes to say that if the value of A, that is the income which is chargeable under the head capital gain by virtue of that formula, is negative. When can that be negative? Only when the amount received by the partner is less than his capital balance. In such cases, that will be negative or maybe even 0. In such a situation, that will be deemed to be 0. Impliedly, you are not allowed to carry forward or set out this loss. Provided further that the balance in the capital account of the specified entity in the books of the specified entity, specified person in the books of specified entity is to be calculated without taking into account increase in the account, capital account of the specified entity due to specified person due to revaluation of any asset or due to self-generated goodwill or any other self-generated asset. That means this was the planning which we had been doing earlier. In the partnership firm, there was a reconstitution, assets were revalued, credited to partner's capital account, partner retires, the amount was paid to him. So he was getting more than what his capital was. Therefore, this section very clearly says that you have to ignore the capital account due to revaluation, that is increase in capital account due to revaluation. Now the words, meaning, expression, reconstitution, specified entity, etc. have already been defined in 9b. We will not repeat it again. In the event of explanation 2, please check it out. In the event of reconstitution, both 9b and this section will apply. That means there is 2 taxes, one in 9b and other one is chargeability. In this, it will be charged on the head capital gains. Money has not been defined in the act. So we briefly will take what is meant by money. Money is nothing but a current medium of exchange in the form of coins, banknotes, shell coins collectively. Today, nowadays, even digital mode of transfer will be considered. Any circulating medium of exchange, including coins, paper money, gold, silver, or other metal, vagera, vagera, vagera. Now, this term money will again be open for disputes. Capital account represented in any manner. What does that mean? The person, specified person may have accounts, various accounts styled as current account, loan account, advance for expenses, then whether capital accounts include debit balances also. Now there may be a practice if the reserves and surplus are shown separately in balance sheet, then what will happen? We need to look into the nature of account, whether the partner is liable to be to the firm, whether he has to account for the expenses, whether he has to refund the amount. All those will be taken into account before concluding that there is a capital account or not. Or does it mean that? Now, as I told you, we for the time being assume that the capital account means the net of all balances excluding loan, because loan it will be on a different footing by itself. It all depends upon the contractual agreements, obligations between the firm and the partner. Or does it mean the manner in which it is contributed, cash, asset, business connection, so on and so forth? Now, these will only be a form of contribution, contributing capital. Therefore, let us not confuse this with what you call capital in any manner. For the time being, we assume that capital means net of all balances, excluding loan, which depends on the agreement between the partner and the firm. Self-generated asset. Now, for the purpose of this section, these words mean that these have been acquired. These have been acquired without incurring any cost or for purchase, because goodwill can also be acquired by payment. So this will not be considered over there. For the purpose of this section, goodwill means only that which has not been purchased. It has been developed over a period of years. Yeah. Now, as I told you, we were discussed now that when look into the explanation 2 with regard to the constitution of the specified entity, both 9B will come into play under said taxation and shall be worked out independently. That means both 9B and 45 will apply. Revaluation is another issue. This word revaluation of which year has not to be considered, whether before the commencement of this act or after the commencement or the year in which reconstitution takes place. Revaluation, the word revaluation has been used only in the second proviso to section 45(4). If there is any revaluation of an asset, please be very careful. It is not being restricted to only capital asset. It can be revaluation of anything, any asset. It can be short-term asset also. It can be depreciable asset also. Or due to recognition of self-generated asset, such increase will have to be ignored and all revaluations have to be ironed out. Now look into this. This proviso talks only of revaluation. It is not speaking of devaluation. Hence, is there a possibility? Yes, there is a possibility. Impairment of asset is possible. So in the event that there is a devaluation of an asset, this section will not be applicable. This proviso will not be applicable. No carry forward is permitted, as we have already seen that. Now, we have seen that in section 45(4), the amount received by the partner on account of a transfer of an asset to him, that is revalued amount. I'm once again taking it the revalued amount, which is received by the partner. Then the firm is paying tax on such enhanced value. If that particular asset is again a subject matter of sale at a later date, in that case, the firm has already paid the tax on the higher value. So that amount which we are paying tax under 45(4) will now be allocated to other assets remaining with the firm if they are revalued. For this purpose, the rules have been given. We will go through the rules. Correspondingly, section 48 has also been amended to say that because 48 is the mode of computation. It gives how capital gains are to be computed. It says that from the sale proceeds, expenses on sale are deducted, cost of acquisition are deducted, or cost of improvement, and this is the one which has been introduced. In case of the value of any money or capital asset received by a specified person from any specified entity, which is charged under section 45(4), that part also will be reduced, which is attributable to the capital asset being transferred by the specified entity. So this 45(4) charge, if it is on account of the capital asset which is transferred to the partner, only on account of that, if there is income under 45(4), that will be attributable to the remaining asset. If the partner is given the entire amount has been paid only in cash, this provision will not come into picture. Now, what is an attributable amount? Thus, the amount that has been chargeable to tax under 45(4) will be attributable to the remaining assets and will be allowed as a deduction on subsequent sale. Now, we have amended, or rather inserted, Rule 5 in Rule 8AA. This has come into effect by notification of 2nd July, not by way of Act, because by the time we purchased the Act, it was not there. Subsequently, this has come. This rule goes to explain us as to what will be a short-term asset and what will be a long-term asset. It gives us 8AA5 is the rule. This says they specify the situations in which the asset will be short-term capital asset. It gives us 3 categories. The first one is the amount or part of the amount if shall be deemed to be from transfer of a short-term capital asset. That means in 45(4) we are charging some amount to tax under the head capital gains. That has to be attributed to assets. The assets can be long or short. So what will be the attributed to short-term, what will be attributed to long-term gains, not asset gains? How will we determine? This is if it is a capital asset which is short-term at the time of taxation. See, when is it is going to be taxed? In the year of receipt. Okay. Then, if it is forming part of a block of an asset, block of asset by virtue itself is a depreciable asset and therefore it will be short-term. Or if it is attributable to capital asset being self-generated asset and self-generated goodwill as defined in explanation 1, clause 2 of explanation 1 to 45(4). What is that goodwill? We have been repeatedly saying it is that goodwill which has been not acquired by way of purchase. That means it is totally without money, any money. And how will we say it is a long-term taxation? Capital gain tax will be a long-term. If it does not fall under any of the above 3 categories, it will be a long-term capital asset. Now, having said that, let us look at a situation wherein a partner is given both. He is given long-term capital asset, he is given short-term capital asset. there are still some long-term capital assets remaining with the firm, some short-term capital assets remaining with the firm. Taxability of long-term, short-term, we have already given the above formula, we can determine. But what about attribution for the purpose of section 48? In the entire 45 and what you call 9B, there has been no references to section 50 or depreciable asset. In the guideline which the board has issued, circular number 14, there they have specified, they said that they have missed out the provisions relating to short-term capital asset or depreciable asset. That is why they have said that all those provisions that are applicable to long-term capital asset will be mutatis mutandis be applicable to short-term capital asset. Reference to section 48 will be meaning as reference to section 43(6)(c). Reference to section cost of the asset, that is over there, will be meaning to reference section 50 over there, block of the asset. In the long term we say asset, in the short term it will be a block of an asset. That is how they have said that all those will be applicable equally. Now, after the determination whether it is a short term or long term capital asset, we have been saying that 45(4), 45(4), 45(4). What is that amount? The amount that is charged to tax under 45(4). I have now to allocate it to other assets which are remaining with the firm. How, what portion, what way it has to be allocated? This is the rule that has been introduced, which says that for the purpose of 48(3), clause 3, the amount attributable to remaining assets, remaining capital assets, will be worked out as per the rules provided in the manner provided in this rule. First one, this is the only sub rule 2 in rule 8AB, which is going to be problematic. All the other rules 2 that follow 3 and 4 may not be that difficult. So where the aggregate of the money and fair value of the capital asset received by the specified person, that means he receives money, he receives asset. Both those chargeable to tax under section 45 relates to, so that is the amount that is charged under section 45(4). If it relates to revaluation of any capital asset or valuation of self-generated asset or self-generated goodwill of the specified entity, the amount attributable to capital asset remaining with the specified entity for the purpose of 48(3) shall be the amount. Please be careful over here. We will simplify it. Shall be the amount which bears the amount charged under section 45(4). That means whatever amount is charged under section 45(4), that is A. I told you to remember that A. The same portion as the increase in or recognition of the asset because of revaluation or valuation. One asset has gone by, say, some amount X. That is this. And the aggregate of all the increase in revaluation, all sum of the assets that might have been revalued, total of the revaluations, that is capital gains in 45(4) into revaluation related to particular asset divided by total revaluation of all the assets. That is how it goes like. This is the amount that is to be chargeable to that particular asset. We will work out the problems on this. Don't worry for that. So, but for the time being, to understand that, we need to have the following components. Amount taxed under 45(4), increase or recognition of the value in asset because of revaluation, and total increase of because of revaluation of all the assets. You can put it into the formula, that is amount on which capital gain, tax has been charged under 45(4) into revalued amount of the particular asset divided by the total revaluation, total increase in on account of revaluation. Now, even with this formula, This may not be as simple as it appears. Number one, only money is given, only stock is given, only asset is given, a mix of all those, mix of 1 to 3. There are various permutation and combinations when under each of the circumstances, the amount attributable to the asset for the purpose of section 48 may be difficult. Very easy if we remember this following. See, this sub rule will be applicable only where there is a revaluation, or you are accounting for the self-generated goodwill, or you are accounting for self-generated asset. If there is no revaluation, then this clause is not applicable. Please be very careful. It is not necessary that the revalued assets are given to the outgoing partners. No, need not give any revalued asset to the partner. You can just give him cash, you can give him asset without revaluation. Now, next clause, that clause 2 or sub rule 2, we have seen that is applicable when there is a revaluation. Now, what happens when an asset is given or when cash is given and the gain in section 45(4) is not attributable to any revaluation? So, when the amount chargeable under section 45(4) does not relate to revaluation of any capital asset or valuation of self-generated asset or goodwill, there will be nothing that will be attributable to section 48 clause 3. Likewise, if we go further, if there is only one asset that has, the asset that has been given to the outgoing partner, that has been given to the specified person has been revalued, then also nothing will be attributable to 48(3). Now, these are all procedural aspects. When there is a revaluation, we have to submit form 5C. It has to be submitted online before the due date, and it has to be signed by the person concerned. That is, who is authorized to sign under section 140. We have seen that because of the revaluation, some other assets have increased. There is an increase in the value of assets. We are not going to allow any depreciation on account of the revaluation of an asset. That is, whatever amount you are attributing to assets because of revaluation will not be allowed as deduction. Depreciation will not be allowed on that. As I told you, in the event of reconstitution, both 9B and 45(4) will apply. Another issue, 50C, whether 50C will be applicable. We know that 50C is applicable in a situation where the consideration is lower than the market, registrar SRO value or guideline value or circle rate. In some places it is called. So when we deal with section 9B or section 45(4) for that fact, whether we need to take into account market SRO value, the answer is no, because 50C is itself is a deeming provision, 9B is again a deeming provision, and that in such a situation we cannot take both deeming. One deeming provision cannot be imported to another deeming provision. It is for this reason that 50C will not be applicable. Now, I told you that depreciation, what you call, in the case of depreciable asset, the circular says that all those rules that are applicable to capital asset will be applicable to depreciable assets also. Yeah. So this was about the theoretical aspect of what we have seen so far. Now we will look into the, I think I have to ask someone to come so that I can look into the other aspect. That means we will take some examples in over here and try to explain by way of an examples rule 8 AB, 45.4 and 9B. Nana adi maro word tema cash the T Tariqa. Examples. If the word closes. Closes in word. Closes. Don't say. Don't say. Yeah. Now, folder open చేసుకోండి. Open చేసి example తీసుకోండి. Example docs. అది. Now look, the circular number 14, which was given in 2nd July, it has given us some examples. I have taken some example from there, and based on that example, we will try to interpret and explain the provisions which you have read so far. Tally open up. I have also made accounting entries for that. If possible, if I'm able to explain you all, or rather if I'm able to catch hold of tally properly, I will try to explain by way of accounting entries also. Otherwise, I will just take those examples and let you know that. Alt F1 is F12. అదేనా F12 కూడా సరిపోతుంది. Alt F12 పెట్టాలి. Function F12. Function F12. Yeah, ఇది పక్క కలదా మీద నుంచి చెప్పండి. బెస్ట్ అది చాలు. ఇప్పుడు ఆ వర్డ్ ఏంది ఎక్కడ ఉందో వర్డ్ ఇదే కదా. Now the first example in the circular, I will take that ABC, there is a firm, ABC are equal partners with 10 lakhs each as capital. The firm has 3 lands STU, each valuing book value 10 lakhs. All these are long-term assets. Valuation as per rule 11U has been carried out. S and T are valued at 70 lakhs each, and U is valued at 50 lakhs. A retires. The firm gives land U and rupees 11 lakhs to Mr. X, Mr. A. Sake of convenience, indexed cost of land may be assumed at 15. While dealing with the theory, we said that in the beginning, that whenever there is a reconstitution, 45.4 and 9B will come into picture. To arrive at the value or the balance of the partner's capital account under 45.4, we have to allocate the gains that are going to arise to the partner because of giving to him the asset. And for that, first we need to work out 9B. The fair value of the land is 50. Indexed cost is 15. Capital gains by virtue of 9B is 35. So for the sake of convenience, we will ignore cess, surcharge, etc., etc. We assume that 20% is going to be the tax. Therefore, 7 would be the tax on that. That is so long as income tax calculations is concerned. When we allocate the income to the partners as per the accounts, we have to arrive at the book profits. The book profits would be 50 minus book value 10. Okay, book gains are 40 only, but then I have to allocate to the partner after taking away the tax. Therefore, 7 rupees or 7 lakh, 7 crores, 7 whatever you call it, 33 will be allocated to the partners. Because all are equal partners, 11 will be the share of Mr. A, the outgoing partner. Now we have, this is about 9B. Now we have to work out the capital gains under 45(4). The amount due to the partner is, we have certain requirements over there. Number one is, what is the amount due to the partner? We have to first find out. The amount due to the partner would be, number one, the opening balance. In this case is 10. His share in the book profits on account of long-term capital gains is 21. That is the one we have. We are paying, giving to the partner money and asset land, which is long-term. Therefore, he will get 61. The A in this case would be, that is the amount that is going to be charged to tax under section 45 would be capital balance 61, capital balance 21, and amount given to the partner 61, that is money plus asset minus capital balance. 61 minus 21 is 40. 40 is the amount that is going to be charged as long-term capital gain. And 8 would be the capital gain tax. Now, why LT? Why is it long-term only? Because land U is long-term at the time of taxation, that is rupees 40. If we refer the rule 8AA52, that is holding period, we said that how to determine whether it is a long-term or whether it is a short-term. If it is anything other than those three, it is a long-term. So we have very clearly specified that land is going to be is a long-term. So it is a long-term tax over here. Thus you see that there are two taxes, one in 9B, rupees 35 on 35, and in 45(4) on 40. This 40 that which is charged under section 45(4) will have to be allocated to the remaining assets. Now, look into the rule 8AB2. That is the one which we are supposed to take shelter, take rescue for the purpose of allocation to the partner, to the other assets. Because all assets are revalued over here. As all the lands are revalued by the firm as per the rule, valuer under rule 11U, the amount taxed under 45(4) has to be apportioned to the remaining assets revalued. The condition is there should be revaluation. It is, in this case, both S and T are revalued and both are increased by rupees 60, that is an equal ratio. So hence, in this case, that 40 will be allocated in the ratio of 30-30, that is 1:1. That is total increase is 60, of which 30, because of one land and 30 because of other land. So what is the total increase? 60. What is the increase attributable to the asset? 30. So therefore, amount to be attributable to the asset would be, for the purpose of section 48(3), 40 into increase in that asset divided by total increase of all the assets. That is the ratio we have given. Now subsequent sale. Let us suppose at a later date S is sold for sale, let us 45 rupees. 48 clause 3, what does it say? That first, cost of the asset, expenses incurred on the sale. Next, the amount that has been attributed under section 45(4) to the particular asset. That means what is the amount attributed over here? 20 rupees is 20 is the attributed value over here. Therefore, from 45 lakhs, please remember the initial cost is only 10. Therefore, only 45 minus 20. 20 lakhs will be reduced from the sale consideration of 45 lakhs and only the balance will be considered. Is that clear? Now let's go to the next one. Let's modify the problem. Suppose fair market value, for the sake of convenience I'm taking further, of land S is 40 and that of T is 100. That means S increased 30 and T increased 90. Now, how? Because in the earlier problem, both there was an equal increase. So there might be slight confusion. So I'm taking it in a disproportionate increase now. Total revaluation is 120. That is 90 plus 30. Share of S is 30, share of T is 90. Taxable under section 45(4) is 40. We will not change that. The attribution to land S will be 30 divided by 120 into 40. That will be 10. And for land T, it will be 40 into 90 divided by 120. That's how it will be allocated over there. Let's continue the problem and let's look into rule 8AB3. If we assume that in the above example, the firm had adequate cash balance, the firm did not revalue any asset. A receives money of 40 lakhs and no further asset. Now, section 9B is not applicable because A did not receive any capital asset or stock in trade. Yeah. Partner A receives money 40 lakhs and no asset. So A's capital balance 10, money received 40, amount chargeable 30. Further, there is no revaluation of any asset, therefore nothing is. Nana? Now, I'll move on. Now, because there is no revaluation of any asset, you cannot allocate this 32, sorry, no revaluation, no allocation. 48(3) will not be applicable over here. Let's take 8AB rule 4, which says that if there is an asset that is given to the partner only is revalued. Assume, continuing the same example, land U is given to the partner and its fair market value is 50. and the firm did not revalue any other asset. Please be very careful. No revaluation of any other assets. So A receives 10 lakhs plus land U. Let us assume that the index cost is 15. Now, fair market value 50, index cost 15, 9B is 35, tax is 7. Fair market value of land for allocation to book profits. For allocation to the partners, we need to arrive at the book profits. 50, 10, 40, surplus 33, allocable 11. For 45.4, A's capital balance is 21, 61 paid, 40 is 45.4, 8 is taxable. 8 is tax. Nothing will be allocated because by virtue of rule 8A 5.2, this is going to be a long-term capital asset, we know. There will be no attribution to other assets. You see rule 8AB4, which clearly says that only that asset which is revalued, it is not given to any, no other revaluation is done. There will not be any allocation or appropriation to assets. Now, we will be taking the first part example. I believe this style is viewable by everyone.
Yes, sir.
This is the opening. It's view. You can view, no?
Yeah.
Yes, sir.
Yeah. Now the capital accounts of the partners, that is opening A, B. The very first problem are 10 each. This is, I'm showing only the opening balances. The opening balances of the assets are S, T, and U. Now, what are the transactions? One second. Here the 14 thing. Now we'll go to the transactions. Let us take the first one. The person, the partner who is retiring. See, what have we done?
Ramakrishna, any issue? Sir, unmute చేయండి sir. Mute లోకి వెళ్ళిపోయింది రామకృష్ణ గారు. Yeah, okay.
అది పక్కన లాగేమా నాకు ఎంట్రీ కనిపించలేదు. ఇక్కడ ఉండండి, ఇంకేనా మంచిది. Yeah. So 11 rupees we have I assume the 31st July, and there are no business carried on between 1st April to 31st July. This is the only transactions we are assuming. Amount paid on account of reconstitution as per the reconstitution deed. That is the first one. And we have given him land U, A's account debit to land duly valued as per rule 11U. So land U has been credited. Careful over here. How this 11 has come? We have seen that there is a revaluation profit, book profit of 40 minus 10, 30. Sorry, 33 is the book profit. After take 40 minus some amount, 50 minus 10, 40, 40 minus 7 tax, 33 is the surplus we have allocated to partners in equal ratio. This is what share of profit to the partners.
Ramakrishna garu, just sorry to interrupt you. Sharing అవ్వట్లేదు ఇప్పుడు.
అవటం లేదా?
ఆహా లేదు లేదు.
ఉండండి. అదే టాలీ అవుదామో అయితే.
ఆహా ఇందాక అయ్యింది కనబడుతోంది.
ఇందాక
అంటే మీరు సైమల్టేనియస్ గా టాలీ వర్డ్ అవి పెట్టుకుని ఆ ఇంటర్చేంజింగ్ అది కొద్దిగా కన్ఫ్యూజ్ అవుతుందేమో.
అది
బట్ ఇప్పుడు షేరింగ్ పూర్తిగా ఆగిపోయింది. మళ్ళీ షేర్
ఇప్పుడు మన వాళ్ళకి ఇక్కడికి ఉన్నారులేండి, ఏదో చేస్తున్నారు కాబట్టి.
అదే
అదే మాకున్నా నేను పక్కనే టెక్నికల్ టీమ్ ఉంది మాకు ఇక్కడ.
నౌ ఇట్ ఈస్ అగైన్ స్క్రీన్ షేరింగ్ నౌ
వర్డ్ వచ్చింది కానీ టాలీ కావాలి.
రెండు వచ్చాయి సార్.
రెండు వచ్చాయా?
ఎస్ సార్. అదే వన్ ఆఫ్టర్ అనదర్ వస్తాయి, రెండు ఎట్ ఏ టైం రావండి.
రెండు ఎట్ ఏ టైం రావు.
అదే నౌ టాలీ ఈజ్ విజిబుల్, ఎర్లియర్ వర్డ్ ఆల్సో విజిబుల్.
సో ఇది మనం ప్రాఫిట్ పంచే వాళ్ళకి అనమాట. బాబు మీరు ఎక్కడ ఉండండి, మనకి ఏదో అవుతుంది, అది ఉండండి. నేను Alt F2. Now look at this. This is the excess amount which we have paid to the partner, which is attributable to the asset that has been transferred to the partner. That is more important over here. If any gain is there, if any asset is transferred, and because of that there is capital gain, that amount of capital gain under 45(4) will be allocated to the other assets, provided other assets are also revalued. So in this particular case, the remaining assets are S and T, wherein the allocation has to be done as per rule 8AB sub rule 2. So that will come into picture, and we have allocated them 20/20 each. That is how this calculation goes. Other partners capital account also roughly I will show. I will take only one example in tally because rest all you all can follow. See, to pay the other partner we require some cash. To pay the capital gains we require some cash. So I have brought in cash from other partners and paid him. And the balance in profit and loss account, whatever was there, we have transferred it to the remaining partners. That is how the cash in hand has come into picture. Now this, for sake of convenience, as I told you, I have grouped the revaluation increase and kept it separately so that it is not mixed with the original cost of the land. Because when we sell these lands S or T subsequently, that part of the consideration which was attributable to that land will have to be reduced from the sale consideration. We have taken example over there. This is how I have kept it, so that when I sell land subsequently, say S I sold for some amount, X amount, X minus 20 will be the amount that will be considered, because we have already paid tax on this 20, we will not again pay tax thereon. This was about the entries in tally. I'll take only one example on tally, because it may take a lot of time to put other examples. I'll go to the word now. So that was about explaining the rules by way of example. Let's take a mix of assets, both long-term as well as short-term assets. For that, we will take one small example. A, B, and C are equal partners with 10 lakhs each as capital. I will not take tally now over here. Though this example I put in tally, we will not open that. The firm has land which is WDV 25 lakhs and cash rupees 140. What is this thing saying? My internet connection is answer. Everyone can hear me?
Yes, sir.
Yes, sir. Yes, sir.
Yeah. Because some plop-up has come. It says that my internet.
Yeah. Sometimes bandwidth low, some pop-up
only
may
due
come,
to
sir. But
fluctuations.
Okay.
you can
Fine.
proceed.
Now both land and buildings are revalued. Land at 50 and building at 35. The firm gives both land and building to the retiring partner. For the sake of convenience, we will assume the indexed cost to be at 42. First, what do we have to do? We have to now first 9B find out. 9B here will be for two aspects. One, other one will be for land. Land by virtue of rule 8AA52 is long term, as we have said, it is a long term. Now 50 is the sale or rather fair market value, 42 is the indexed cost, 8 is the gain, 1.6 is the tax. I have to allocate, I have to find out book profits, 50, book value, 40, book profits, 10. Capital gains I have to remove. A being 1/3 partner, he gets a share of 2.8. That was for long term. There is a mix of building. The building would be short term because it is a depreciable asset by virtue of rule 8AA1, it will be short term. The fair market value 35, WDV 25, and 9B short term capital gain will be 10. We assume that it is 30% tax, ignoring cess, etc. It will be 3 rupees. In building, or for that fact, in any short term, there cannot be any book profits and tax profits separately. Because in long term, there is indexation case. So what is going to happen over here is A share in 7 will be 2.33. Now, chargeability under section 45(4), land 50, building 35, we have given him 85. What is the capital account? Opening balance is 10. His share in long-term capital gain is 2.8. His share in short-term capital gain book profits 2.33, both are long and short book profits. So total will be 15.13. $15.13, 69.87 would be the balance. As both the assets are given to the partner, both the assets that were revalued are given to the partner, and nothing is remaining with the firm. Therefore, there are no other assets that will be allocation under 8B4, 8AB4 is not applicable. In this, now let us suppose in this case only, if the firm has any other capital asset and it is not revalued, even then nothing is applicable because the condition is that the asset should be revalued. Not necessarily all the assets should be revalued. Then what is the amount that has to be treated as short-term capital gain and what is the amount that has to be treated as long-term capital gain? In this 69.87 has not been specified either by 9B or by 45(4), nor by the rules, nor by the guidelines. If you go to 8AB2, it says that in the case of attribution to capital asset, it says that it has to be appropriated in the ratio of increase. If I apply that formula over here, then in that case, land has increased by 10 and building has increased by 10. This means that because both have equally increased, the amount of gain of 69.87, or what is that? 69.47. What is that amount? 69.87 will be allocated equally. That is, to short term it will be 34.93 and to long term it will be 34.94. Short term capital gains, long term capital gains will be 20% of that and short term will be 30% of 34.9. Now, this is one way of doing the thing if I take the shelter of that, but that AAB4 is only saying that it will be allocated to the asset remaining with the firm. So, logically speaking, that we may not be applying over here because this allocation may be going wrong. Let's go to the second alternative. అంటే ఇక్కడ సింపుల్ లాంగ్వేజ్ లో చెప్పాలంటే వాట్ వీఆర్ గోయింగ్ టు సే 85కి ఎంత అయితే 30కి ఎంత 50కి ఎంత total 85 sale proceeds, 69.87 is the gain. For 50 how much, for 35 how much. That will be the simple calculation. If we look at that and if we try to allocate based on the what you call fair market value or the market value, then in this case the allocation of 69.87 to long term would be 50 divided by 85.85 into so and so. In this case 41.1 would be the long term gain and tax would be 20% on that. Likewise on building it will be 35 divided by 85 into so and so, it will be 28. Sorry, something gone wrong over there. It is not 71.2, it should be 69.87. Okay, whatever it is, the formula would be that. That will be a small calculations error. Now, let's continue the same example. And we will say that there is another depreciable asset. Let's call it building 2. In the same block with a WDV of 40 lakhs, revalued at 50 lakhs, and another land costs 30, revalued at 45 lakhs. Now, how do we attribute the amount chargeable under 45(4)? That is 69.87. Again, we go to the rule 8AB. It goes to say that this is the amount which is to be attributed in proportion to the increase. Thus, the increase in building 2 is 10 and increase in land 2 is 15. This amount of 69.87 we will allocate in the ratio of 2:3. That is 69.87 divided, that formula I have already given over there. So 69.87 into 10 by 25, 27.94. So the block in which contains the building will be shown in the balance sheet at 67.94 now. But remember one thing, there will be no depreciation under section 32 on this increase. The circular 14 giving us last paragraphs 4 and 5 in that they say so on increased value on account of attribution. Now, the attribution would be 69.87 into 15 by 25 gets a 41.93. And in the balance sheet, the land will be shown at 71.93. Further, suppose the building 2 is subsequently sold and there is no asset in the block. That means we are now selling a depreciable asset and the block ceases to exist. Section 50 subsection 2 will come into picture. If sold for 74, let us say that it is sold for 75 rupees, sorry. Then what does the section say? 27.94, the attributed amount will be reduced from 75 and only 47.06 will be taken for calculation because we have already paid tax on the 27.94 and the WD will be 40. Because the WDV is 40 and it is sold for 47, there will be short-term capital gains of 7.06. Now let us suppose if the same is sold for 60 and after reduction the balance would be 32, the WDV is 40, so there will be a loss. The sale price is only 32, book value is 40, there will be a loss, and because the block ceases to exist, 52 will say that there is a long-term, there is a short-term loss. We'll go further, one step further. There is another building 3. Let us take another building 3. In the same block, WDV is say 50 and is in existence. The block is in existence. That is, this building is still there. As the block does not cease to exist, 50 subsection 1 will be applicable. So we'll work out the WDV. At the beginning of the year, building 2 and 3 are there, 90. We assume no additions, total 90. Building 2 sold 75. What did we say? The amount that is attributed to the asset will be reduced from the sale value. That means 75 minus 27. Only 47.06 will be counted for the purpose of reduction. Earlier, what we used to do, 90 minus sale value minus plus additions, etc. Now the sale value 75 will not be reduced, only 47 will be reduced. And the block exists, so WD will be 42.94. See, there cannot be any short-term capital loss in the case of asset block falling under 50 subsection 1. It can be gain. Is welcome ledu malli nu kottindi danana malli veltam ledu idi kindaki pakka part kinda kellali koncham ekkondi ఇది దీని కింద ఉంటుంది ఈ స్క్రీన్ ఉంది కదా స్క్రీన్ కిందకి వచ్చింది అది స్క్రీన్ తప్పించాలి పర్వాలేదు అక్కడ వదిలే. See, what I will say over here is, see, all these are based on the calculations are based on the circular which circular 14 dated 2/7/21. That was about explanation about this problem comprising all those. Shall we continue with some other problems? Yeah?
Yes, sir. Yes, sir.
We can continue now.
Yes, sir. Yes, sir.
It closes. Can I take tally for this? Or the tally closes? I get tally for my bold time, but this open just what? This escape. Excel. Yeah. Change. That is all. చాలా మందగా తిరుగుతున్నది మెల్లిగా ఒకటేదా మరొకటి పడుతున్నదేంటి యా వచ్చింది We'll take one example.
కింద స్కేల్ దగ్గర 150 కి దాన్ని డ్రాగ్ చేయి
ఎంత కదా 100 కి వచ్చింది అది
100 లో ఉంది 150 కి డ్రాగ్ చేయి రాజు యా
సరిపోయింది కదా
ఇది పైన కూడా ఎన్లార్జ్ చేయి పైన ఇక్కడ ఇంటూ పక్కన పైన ఉంది కదా
ఇదా
టాప్ రైట్ సైడ్
ఎన్లార్జ్ ఉంది అది
అవునా ఓకే
ఎన్లార్జ్ ఉంది
అది కొడితే క్లోజ్ అయిపోతుందిలే ఓపెన్ చేయి ఆ మధ్యలో
డొక్లో కూడా అయిపోతుంది
యా ఓకే
now see we have same ABC equal partners in a firm with capital 20 lakhs each. A retires. At the time of retirement the firm has the following assets and liabilities: land 40, building again WDV, cash 140, debtors 30 and creditors 35. Firm revalued its land and building at 50 and 35 respectively, and the firm decides to give rupees 10 lakhs and land to Mr. A together with the debtors and creditors. Assume the land is long term. First, go for 9B. It is 50 FMV, index cost 42, capital gains 8, tax 1.6 under 9B. Book profits 50, 40, 10. After removing capital gains, allocable surplus is 8.4. A share is 2.8. Now opening balance of A is 20. Attribution for capital is 2.8. Add creditors minus debtors. Closing balance is 27.8. Fair market value of the land 50. Money 10. Total consideration 60. Capital balance at the time of reconstitution is 27.8. 32.4 would be 60 minus 27.8 would be long-term capital gains. So here we have, again, this problem is simple, which we have already seen earlier. Now, there are no other assets as building is revalued besides land. Building is a depreciable asset. Please be very careful over here. And that is remaining. The entire amount of 32.2 will be allocated to the building only. Nowhere in the act it is specified that long-term gains on account of long-term under 45(4) should not be allocated to short-term, depreciable assets. The act is saying only that whatever amount remains on account of revaluation will be allocated to the assets attributable to the assets. And by virtue of the circular 14, paragraph 4 and 5, the logic is equally applicable to depreciable assets. Therefore, the entire amount of 32.2 will be now allocated to building only. Let's go to another example. మళ్ళీ ఇది ఇక్కడ పక్కన పెట్టాలేమో
ఇంధనం పెంచటమే సార్ పర్సంటేజ్
స్కేల్ పెంచాలి మన వాళ్ళు రావాలి మళ్ళీ అది స్కేల్ మనకు కనిపించదు అక్కడ పక్కన ఉన్నది అది నానా ఇక్కడ ఉండి స్కేల్ పెంచి మళ్ళీ నేను రెండో దానికి స్విచ్ అయితే స్కేల్ పోతున్నది.
అన్ని షీట్స్ కి ఒకసారి
అన్ని షీట్స్ కి ఒక మాట పెట్టేసి అంటున్నారు. అది కిషోర్ వాయిస్, అది కిషోరేనా?
అవును సార్.
హౌ ఆర్ యు?
అవునండి, అవునండి.
ఎక్సలెంట్ సార్.
ఏంటమ్మా? ఇంకా ఉన్నాయి. ఒకటి 1 2 3.
అవి EG4 EG5 అన్ని చూడు రాజ్ కుమార్. ఎగ్జాంపుల్ 4 5 ఎగ్జాంపుల్
కొన్ని స్కిప్ చేద్దాం, ఎందుకంటే జనానికి బోర్ కొడుతున్నట్టుగా ఉండి తగ్గిపోయినప్పుడు 39కి వచ్చారు, 69 నుంచి విడిపోతారు. ఎంతసేపు కూర్చుంటారు వాళ్ళే, నన్ను 3 గంటల.
Session was very interesting. Everybody is listening. Only 1 or 2 people are just dropping out, but it's very good session, sir.
సెషన్ బాగుంది, పర్వాలేదు.
And you are covering from all angles, sir.
Yeah, we have to. And now we can take it in tally also, but that will consume a lot of time. Now I will take 1 or 2 another example and skip some in between. Yeah. Now we'll take the same thing again. ABC partners, 20 lakhs each capital, and A retires from the firm. At the time of retirement, we have the following. I believe I'm not going fast now.
Sir?
Hello,
sir,
I believe I'm not going fast, isn't it?
No.
Fine,
Yeah.
it is fine.
Okay, sir.
It's okay now?
Yes, sir. Yes, sir.
Yeah. So now we have the following assets: land, building, cash, debtors, creditors. Firm revaluated land and building at 50 and 35 respectively. The firm decides to give 10 lakhs and land to Mr. A. All debtors and creditors are also given. Okay. Now let's go further. First, as I said, we need to go for 9B, 50, index cost 2, 8, tax 1.6, income tax. Book profits 50 minus 40 book value 10, remove capital gains tax, allocable surplus. Capital balance of Mr. A, opening 2, attributable for transfer of land share, creditors 35, 27.8, same. Taxability and I think there is no change in this. No, this is, I think we have already seen, we have come to the same problem.
Yes, sir. First one.
Yeah, we have come to the same one. Now I'll go to the next one. అదే చూస్తున్నాను, ఏంటి అదే ఆ ఫిగర్లే కనిపిస్తున్నాయి, మారలేదు అంటే మనోడు తెచ్చి ఎక్కడ పెట్టాడు నాకు. యా, టేక్ దిస్. Land 50, building 35, furniture 10, machinery 20. We have 3 depreciable assets over here. Be careful about this. Cash, debtors, and debtors creditors equal. Firm revalidates land, building, machinery at 60, 45, 15. No valuation for furniture. Machinery has come down by 5. That is devaluation. What did I say in the beginning? In the rule, one of the rules, rule 8AB is applicable only in case of devaluation. There is no application of the rules, nor 9B, nor 45(4) when there is a devaluation or when there is no upward revaluation. So in this particular case, we can forget about machinery, we can forget about furniture. We need to look into only land, building. So the problem rest, everything will remain same. There won't be any change till allocation of the partner, allocation to the partner. The only issue would be the same thing, that is a mix of long term and short term, as I told you all in the beginning. We have seen one problem over there. I'll take this now. See, I skipped, I think I have not taken building over land or building over here. Now the remaining asset is the remaining assets are building, machinery and furniture. Furniture is devalued, machinery is devalued, furniture is not valued. Hence, there cannot be any attribution under 45(4) to these assets. The next one is building. Therefore, the entire amount of capital gains, 47.2, will be totally allocated to this only. That was about, I believe this example is clear. Not much complications. I'll take another example, 4. Yeah. In this example, as I told you in the beginning, there was one example on 50C. Here, the SRO value of the land is more than the fair market value of the land. So we will ignore, we need not touch the SRO value because one deeming provision cannot enter into another deeming provision. Rest all remain same. Fair market value of the land 60, index cost 52, Vagere, FM value, book profits. This is what I told you all. That is 9B provides fair market value of the capital asset on date of its receipt by partner shall be deemed to be full value of the consideration. Likewise, section 50C says that the circle rate would be deemed to be the full value of the consideration. For one asset, there cannot be two deeming provision. Therefore, 50C will not be made applicable. And accordingly, rest all is same. That is opening balance, etc. and application. Now, I'll take an example on stocks later. Let me go to stocks. Same partners and each was having capital balance of 20 lakhs. The financial position is as under land X 20, land Y 40, building 55 WDV, stock of goods 40, and cash balance is 10. Now land X, Y, and building are valued at 30, 50, 75 respectively. Lands, all lands are long term. The firm carried on business in the intermittent period. That is, till the time the partner retired, the intermittent period, the firm made a profit of 3 lakhs post-tax. The sale price of the goods, I am not calling fair market value because there is a dispute with regard to fair market value attributable. So I'll be calling it as sale price of the goods, which is 42. And A gets money and 50% stock. That is half of the stock, that is 21. Fair market value of the land 30, index cost 22, capital gain 8. Therefore, 1.6 is the tax. Book profits of this is 8.4, attributable to A is 2.8. Stock, now let's go for the stock. Sale value is 21, cost is 20, and profit is 1. We assume 30% is the tax rate, 70 is the amount allocable to partners. A share is 1/3 of that. Let us suppose 23. Therefore, now chargeability under 45(4). Fair market value is 30, money 10, total 40. Capital balance of A, please be careful over here. Let us look at the stock. Capital balance of A is opening 20, 2.8 is share in capital gains, 1/3 profit, that is 3 lakhs, 1/3, 1 lakh, and profit in sale of stock, that is 0.23. So the deemed capital gains would be 15.97, capital gain tax would be 3.19 under section 45. Now look over here. 45(4) does not deal with stock. Therefore, I have excluded the value of stock from the amounts that are received by Mr. Partner, retiring partner, whoever it may be. I have only taken the value of, see, stock by any cost is not a capital asset. And my section 45(4) is using the word any money or capital asset. So while arriving at the value of taxable income under section 45(4), we should not at all take stock. But then if I have to find the balance of the retiring partner, in such case, I invariably have to arrive at the balance. And for that sake, that is why I said 9B needs to be computed beginning. First 9B, then 45(4). That is, therefore, over there is share of profit in the sale of stock has been taken to arrive at the balance. After I take the balance of the, on account of stock, his capital balance would be 24.03. That is the amount that is liable for, to be counted as a capital. Now, this is what I have explained. I have not taken stock for looking into the payment made to the retiring partner. Very careful over there. The section clearly says that. So that was about some of the examples that I could compile for explaining the provisions of these sections 9B as well as 45(4) together with the rules 8AB and 8AA, rule 5. I have skipped off goodwill very intentionally. This itself would consume equal amount of time which we have taken now, and maybe more, with lot of complications involved in over there. Section 55 has changed, 48 has changed, 43C has changed, 43(6) rather. Then 50 has changed. So many combinations are there. There is a proviso which is added to section 50. So number of complications are involved in capital, what you call goodwill or any self-generated. He's not calling self-generated asset. He's calling only goodwill. Rule 8AC has again been introduced now. So with this, if possible, if required, we will take some other time. Now, besides, there are some issues which are still remaining to be resolved. What will be the capital gain index which will be applicable to asset that was revalued earlier and sold subsequently? If it is given to the partner, if it is remaining with the firm, the capital gain, see, for the purpose of counting the cost of an asset, revaluation we cannot take because we are straight away reducing from the sale proceeds. Therefore, be it depreciable asset, be it long-term asset, we have to take the original cost only, and the indexation, in my opinion, would be going back to the original date of acquisition if some part of the asset is still remaining. Now, for the partner, he has received the land on the land, or that for that fact any asset, on the date of reconstitution, not necessarily, so not on, let us not use use the word on, in connection with the reconstitution on some other date. Now, whether the period held by the firm will be counted for the purpose of calculating the period held by the partner remains to be seen, because practically, yes, it has to be taken because he did not purchase. By virtue of the deeming provision, it came to him. Now, what will be the cost? Section 55 has not changed the meaning of cost and indexed cost over there. Cost to the previous owner by virtue of section 50, cost to SSC would be the cost to the previous owner, and cost to the previous owner in this case is firm. When I'm taking cost to the previous owner as the cost to the SSC, that is partner, in such case, the period held by the firm should also be considered. But then the cost to the partner would be the fair market value on the date of reconstitution. That means there is a dilemma. So invariably, I have to take the fair market value on the date of reconstitution, because the section somewhere has said that this will be the cost to the SSC, cost to the retiring partner. But then indexation, which indexation I have to take, original date or this date? That clarification needs to be, it's to be required. Now, this may not be relevant, we'll skip it. Whether the valuation of part of the assets of the specified entity is permitted, or whether all the assets have to be revalued. No, it is not necessary. We need not revalue all the assets, because the rules themselves are saying where something is revalued, something is not revalued. Now, as I told you, there are cases wherein there have been a continuous revaluation of assets prior to 31(3), and all the partners practically have changed. None of, or at least most of the original partners have gone. One or two are remaining. If you look at the definition of reconstitution, it should be in any of the previous year. He should have been a partner in any of the previous year. So does this word in any of the previous year mean only after the commencement of this act or before the commencement of this act? Remains to be seen. Let not any of the partner take the liability of the retiring partner or outgoing partner or incoming, whatever it is, because it will attract 56 to 10. Now, as I told you, that there can be a gap between the event and the date of receipt. If there is a gap between the event and the date of receipt, in between, if the partner dies, then what is the situation? Nothing. Or if the firm gets totally wind up, then what will be the situation? Who will be liable? As I told you, 189 section is there. Section 189, whether the firm is dissolved or not dissolved, all the partners will be liable. If you remember, insolvency together with dissolution of the partnership firm, there is some category like A-list partner, B-list partner, A-list members, B-list members, wherein the past members are also equally liable. Likewise, over here also, probably that type of the thing may come into picture. Now, what if HUF is a partner in a firm? See, whether only income tax will be considered, because there are a lot of cases which go to say that HUF cannot be a partner in a firm. If at all, it has to, number of cases are there. So how do we deal in such a situation? These are the issues that are still remaining unresolved, we can say that. So friends, these are the things which I thought I would share, whatever I have gathered. So there is one saying, we know that finally we have the habit of closing the ceremony by saying some saying. We know that this saying is given by Benjamin Franklin. He says that, tell me something, I forget. Teach me something, I may remember. Involve me, I will learn. So, for all my learning, I would, from the heart, definitely thank U.Ramakrishna Garu, Prashant Garu, the entire executive committee or governing body or and all my fraternity. And thanks one and all. Please be careful if there are any mistakes in these. This is a new provision. The example I have tried to gather from public domain, some are modified over there. Before applying in toto, please look into the facts of the case and then go ahead. Thank you one and all.
Thank you very much, Ramakrishna garu, for your patient and detailed, elaborate presentation. With limited knowledge of technology, you covered exceedingly well the session.
Support of my branch, I would say.
Yeah, whatever it may be, sir, but you dealt the deliberations well with the coverage of PPT and as well as explanations. I request members to unmute yourself and you can pose questions to the speaker if you have any.
I hope substantially I have covered.
Chairman garu.
Yes, sir. Yes, sir. Extensive coverage. Yeah. Sharma garu, చెప్పండి, sir.
Sir, when our senior member U.Ramakrishna garu deliberates on any issue, I don't think there will be any doubts in the minds of the delegates.
Thank you so
Yes,
much.
sir.
Thank you.
Yes, sir. It is extensive coverage, detailed, dealt.
Giving with examples and all.
Example. Yes, yes. Yeah, yeah.
టాలీవే చూసుంటే బాగుండేది ఇంకాను.
No issue, sir. This is beginning on this because initially when you started the program, you said that there is no such any material or any case laws or any.
Sharma garu, Sharma garu, షేర్ శాసనం వేశారు మీరు.
దీనికి చేంజ్ నాకు దీని లోపల తోసేది శర్మ గారు. So I must also be equally thankful to him.
Yeah. Now, okay, Sharma garu. Yes, sir. Sharma garu is always mentor to branch, sir.
Yes. ఆయన ఉండాలండి, శర్మ గారు ఉండాలి, పొడుస్తూ ఉంటారు. అయినా మా శేఖర్ గారు
supports the branch always.
ఇదిగో మా శేఖర్ గారు ఉన్నారు. ఆయన వీళ్ళిద్దరూ మాకు బలం. వాళ్ళు ఉంటే మాకు ఉత్సాహం పెరుగుతుంది. అదిగో ఆయన పెద్ద ఆయన కూర్చున్నారు కదా అక్కడ. బాగున్నారా? ఏమా శర్మ గారు ఏంటి?
కనిపించే రెండు సింహాలు మేమైతే కనిపించని 3-4 సింహాలు మీరు సార్. మెంబర్లు కానీ సార్ విశాఖపట్నం బ్రాంచ్ కి అందరు మెంబర్లు 1000 odd or 1100 odd అనుకుంటాను. అందరూ కూడా వాట్ ఎవర్ ప్రోగ్రామ్ కలిసి వీఆర్ ఆల్ వన్. అందరూ సపోర్ట్ ఉంటుంది.
ఫిజికల్ ఉంటే దిస్ వుడ్ హావ్ బీన్ బెటర్.
Yes, sir. Yeah.
అలా అనుకున్నాము యాక్చువల్ గా, మీరు అన్నారు కూడా, బట్ కొంచెం భయపడ్డాం.
We can take subsequently some other date goodwill issues.
Sure.
ఇంటెన్షనల్ గా స్కిప్ చేశాను, ఖతర్నాక్ అది.
మళ్ళీ చేద్దాం సార్ ఇంకో ప్రోగ్రామ్ ఆఫ్టర్ 2 months or so. We will do this
provided our portal remains same.
యా అది
ఇన్కమ్ ట్యాక్స్ పోర్టల్ అలాగుంటే మనం చేసుకోవచ్చు. అది కదిలితే మనం మనకి తెలియం.
అదే
సార్ గుడ్ విల్ మీద అయితే బోల్డ్ ప్రశ్నలు ఉన్నాయి, కానీ ఇప్పుడు అక్కర్లేదు. నేను
చెప్పలేను కూడా, నేను చెప్పను కూడా వాటికి.
రేపటి ప్రిపేర్ అవుతున్నాను.
గుడ్, వెరీ గుడ్. యా, థ్యాంక్ యూ సో మచ్ వన్ అండ్ ఆల్. బాబు దీనికి గుడ్ నైట్ అలా చెప్పాలి. గుడ్ నైట్ మన వాళ్ళు చెప్తారు కదా.
చెప్తా
చెప్పిరండి, గుడ్ నైట్ చెప్పండి. నేను ఇంకో పెళ్లికి వెళ్ళాలి ఇప్పుడు.
ఎనీ మెంబర్స్, ఎనీ క్వరీస్ ప్లీజ్.
Sir, this is Kantipudi Sachinarayana, Chartered Accountant.
Yes, sir.
Chairman, sir. How are you? How are you, sir?
Fine.
Oh, absolutely fine. How are you?
Ramakrishna, very much fine, sir. I have a small question to pose, sir.
Yes, yes. Tell me if I can.
Would the tax liability on the part of the firm be the aggregate of the amount that is determined under Section 9B as well as under Section 145(4), sir?
Pardon?
The total tax liability on the part of the firm would be the aggregate of the amount determined under section 9B as well as 145(4). Is it, sir?
145 for
4.
145.
Sorry, 45(4).
45 for, yes. It will be
Yes.
both. It will be
Both.
both 9B and 145 for.
Sir.
In the event of reconstitution only,
Yes, in the event of dissolution only that 9B applies.
9B will apply.
Sir.
45 for will not apply.
Sir, I have another small doubt, sir. In case of reconstitution, the retiring partner is paid, for the sake of example, 2 crore rupees, right,
Yes.
sir? The capital balance as on the date of retirement is 1 crore rupees.
Yes.
Since cash is paid, 9B will not apply.
Since cash is paid. Yeah, 9B will not apply.
Will not
9B
apply,
will.
45(4) would be applicable, sir.
Correct. Very
In
good.
such a case, A is equal to B plus C minus D.
Yeah.
That is the amount paid to the retiring partner is 2 crores.
Correct.
Out of the balance standing to the credit of his capital account is 1 crore. So 1
Yes.
crore is capital gain tax that is payable by the firm.
Correct.
Is it long term or short term, sir?
Now the problem arises over here. There is no asset over there. We are not
Yes.
giving him any asset.
Yes.
So now there is no rule under 8AA.
B2.
8AA.
Yes.
8AA. We have two
8AA.
categories over there, short term and long term.
Yes.
Short term, we are falling in 3 categories.
Sir.
Number 1 is goodwill, raised वगैरह, depreciable asset, and another one is some
Oh,
other item.
exactly.
Is there.
Yeah. Since cash is not covered there, it is long term. Yes, sir.
That is it. It is
Exactly,
has to go,
sir.
it has to go be, no, it will not even be long term. See, long term, there is no asset. There is no solution for this.
Sir.
No, but because it is falling under 45(4), it is a capital gain tax.
That is no doubt.
No doubt. Which
Yes,
to
sir.
be categorized? Nothing, no answer for that.
No answer as of now.
As of now, no answer.
Yeah, thank you very much, sir, for enlightening. Thank you very much, sir. Thank you, Chairman, sir. Murali-Krishna garu.
Murali-Krishna garu, Sharma garu, Prashant, all thanks.
Excellent program పెట్టారు సార్. యాక్చువల్లీ నేను బ్రాంచ్ లో ప్రపోజ్ చేశాను సార్, కాకినాడ బ్రాంచ్ పెడదాం అనేది.
Good night.
థ్యాంక్ యూ సార్. థ్యాంక్ యూ వెరీ మచ్.
My branch is closing me. Good night, everybody. Thank you, Murli garu. Thank you so much, Sharma garu. All very good night.
Sure.
Most
No,
welcome. We'll see
Now I
someone
request
physically.
Secretary Prashant Kumar to propose vote of thanks because Speaker is in hurry to go to attend a marriage function, I think. So let us propose vote of thanks.
I believe we have got sufficient time now.
Yes, sir. You have covered almost. You have covered 2 hours 45 minutes without giving a question and answers time. But somehow members also doesn't have any questions to pose.
Say, subsequently we will get it.
Yes, sir. Yes, sir.
Yeah,
Prashant,
but
Physical meeting.
Respected Chairman, CS Murali-Krishna garu, Plain Speaker, Senior Member, CAU Ramakrishna garu, past Chairman, Senior Members, and other dignitaries. Good evening to all. I am privileged to propose vote of thanks for the 3rd day session on my own behalf and behalf of Visakhapatnam branch members. Sir, I convey my sincere thanks for accepting our invitation and sharing your knowledge and experience for the benefit of our members. Sir, your lucid presentation on section 45, subsection 4 and 9B of Income Tax Act 1961 as amended by the Finance Act 2021 is extremely well, sir, and exhaustively covered as our chairman has said. Sir, your presentation with practical approach with tally support, Excel support from all angles has given a clear picture about how to approach with these provisions while computing capital gains. Thank you very much for your wonderful deliberations. Dear members, tomorrow we have a session on recent amendments and issues in the tax audit 2020-21-22 by CA Kashi Visweswara garu from our Visakhapatnam. Members, branch has arranged a vaccination camp tomorrow morning. It starts from 10 a.m. onwards at MC Associates, Double Road MVP. I request all the members to use this opportunity and be vaccinated. Stay safe, stay vaccinated. Thank you one and all.
Thank you very much, everyone, once again, and
Thank
good
you,
night. Good
Ramakrishna.
night. So,
Thanks a lot.
very good night. Thank you for giving the opportunity to learn. Thank you so much. Right,
It's
ma,
a
good night.
privilege, sir. It's a pleasure and privilege, sir.
Oh, thank you so much. Thank you. God
Thank
bless
you
you
very
all.
much,
God
sir.
bless you all.
Thank you.
Right, ma.